But there are some sort of pros and cons that you need to consider when you're thinking about buying your nice shiny new bike, which I'm going to run through now. So let's go with cash. So if you're lucky enough, say, to have, I don't know, £15,000 in cash and you want to buy a new blade, then yeah, feel free, go ahead, spend your £15,000 and buy your blade. You don't owe any interest, and you know, there's no sort of nothing else to pay on top of that, really. Although for the most part, there's not a great deal many people who can afford to go out and just spend £15,000 of hard-earned savings on a motorcycle, because that's how it's going to have come about for 90% of us. There's a few people who are lucky enough to buy things with cash and have the money lying around. If you're watching this, and I don't suggest you're one of them, and I'm definitely not one of them, so we have to resort to one of the other methods, using credit. But a cash buy can be for anything. You could buy a cheaper bike, for instance, and just buy it with cash, and not have to worry about anything that comes with interest. In fact, some people refuse to use PCP or loans hire purchase for that very reason. They want to know that they own the bike, and they can do with it what they please. And there are some advantages to that. So what will tend to happen is, if you buy paying cash for a bike, it'll tend to be a little bit older. It might be out of warranty, things like that. So while that's a downside, what it also means is you're sort of free to do as you please with that motorbike. You can modify it as much as you like. There's no commitment to keep paying the monthly payments. Also, there's no credit check as well at the start, so you don't need to worry about those things. There's also a few downsides with paying cash for a bike. So depending on who you buy it off, what dealer, yes, there are some statutory rights in terms of whether the bike's fit for purpose and things like that. So if it blows up as you ride out of the showroom, and it's because the bike was a bit of a pup anyway, then it's sort of down to the seller to put that right for you. This isn't what that video is about. But otherwise, there's sort of limited protection on your purchase. You just have your statutory consumer rights. That's if you buy it from a dealer. If it's a private sale, it's a little bit muddier. So yeah, you have less or no warranty. You might get 3 months on a dealer. You might get 6 months if you're lucky. But yeah, sort of, it's a bit riskier, shall we say. The other thing is that you're spending all your capital. So you're spending your £5,000. If someone offered you, if for instance you had £5,000 and you were buying that bike and it cost £5,000, you could put all your cash into it straight away. But then if that's all your savings, all the money you've got saved up, you've sort of got no backup, as it were. So if that same dealer or that same bike was on offer at 0% interest over, say, even say a year or 2 years, then you might consider keeping that lump sum to one side, paying the monthly payments. You're not paying any more because it's at 0%. But if something else would happen, any issues or anything like that, then you've got that money to one side. If you really needed to, you could sell the bike to cover the rest, cover the shortfall, and pay off, get your money back, as it were. But you might want to keep your money safe. You can put it into an ISA, for instance, you can, or a high interest account, and actually earn some money off that balance. If you've got other credit outstanding, that you might want to pay that off if it's a higher rate. So you've got a credit card with a 17, 18, 90% interest rate on it, with a couple of grand on it. You might want to pay that off using some of your capital, because that'll save you interest in the long run. It's about making the smartest financial choice. Again, not a financial advisor, I'm not an expert on these things, but it is just looking at what's going to work best for you. So that's cash. PCP, we've gone through that, how it actually works, but there's a few things that sort of plus and minuses, as it were, for PCP, which I'm going to go into now. Some of these are common across PCP: hire purchase, loan, and leases, which I'll sort of cover off very briefly at the end. So PCP, you know where you are with a PCP and a hire purchase and loan. You know where you are. It's fixed payments. You've got a fixed term. You know what's happening with it. So you know exactly what to expect. It's not going to go up, or go down over the term of the loan, as it were. Next thing is What tends to happen is that PCPs and loans, not necessarily hire purchase, that's available on used bikes, but definitely on a PCP and a lease, you will tend to have a new bike or a nearly new bike, so it'll be under manufacturer's warranty. So that's another bit of peace of mind for you. And you will tend to get more bike for your monthly payment. If that's what is purely what concerns you, how much you're paying per month, you don't mind a couple of grand deposit or whatever it might be. If that's purely your goal to get the lowest monthly payment and to get the best bike that you can, then that's something you can look at. Although you do need to be careful to make sure, one, that you can afford it, and two, that it's a reasonable deal and you're not just sort of going to walk out the end of it to having to give the bike back and not being able to afford to replace it. Another thing that can happen with PCPs is, as I alluded to earlier, when you trade in your bike or you get to the end of the PCP, there may be some equity there, and there might be another deal when upgrading at the other end. And also the dealer might offer incentives for taking a PCP. So you might have heard some examples when people have gone into car or bike dealers, and it's actually been cheaper to buy the bike on finance than it is to pay cash, because the companies tend to make the money out of finance, and that's why there's more PCP offers with interest rates than not. It helps with PCP if you're someone that changes regularly, so it happens more so with cars, whereas people don't get as attached to them, shall we say. People get a little more attached to motorbikes, so they treat them as their own a little bit more, especially because they tend to be sort of not all weekend toys, but that sort of thing. That's how people tend to view them. So people get a bit more attached to them. But if you're someone that wants to change regularly, you want a new bike every 2 or 3 years, and you simply want to know if you keep paying that monthly payment, you'll have a new bike within warranty, then PCP can be quite useful for you. You do get the option to buy it at the end of the term. So after the 3 years or 4 years, whatever it is, you do get the option to buy it. Another thing you need to consider is that there will be a limited mileage in the agreement. So they kind of start roughly 3,000-4,000 miles per year. Now, if you're sort of a weekend warrior, as it were, then you probably struggle to get up to sort of 4,000 miles a year. If you're buying a brand new BMW GS Adventure and you want to go touring Europe 3 or 4 times a year, then clearly 4,000 miles isn't going to be enough for you. So the more mileage you have on your agreement, then it will put up the cost a little. So you need to bear that in mind. Don't underquote yourself. Do a realistic estimation of the mileage you're going to do and put that on the agreement. If you do go over the mileage, there's normally a pence per mile penalty on there, so at the end you'll have to pay that difference. Also on a PCP or even a hire purchase, you don't own the bike. It's really important you understand that bike is not yours until you either pay it outright, or you end the agreement and choose to buy it. Particularly with a hire purchase, you can get right to the end of the term and that bike isn't yours until you've completed the agreement. The PCP is much the same. It's never yours unless at the end of the term or at some point you pay off the outstanding finance. So what that means is that there's only so much you can do to the bike in terms of modifications. If you modify it too much, then they may even cancel the agreement. They're quite strict on these things. I know people do, and I don't think things like exhaust and stuff like that, the normal sort of modifications, will be a massive issue. But if you're sort of drastically changing or altering your bike performance or whatever it might be, especially things that are not reversible, and the company get wind of it, and they may actually terminate the agreement, expect payment in full. One YouTuber with his BMW recently on Living Life Fast, Ricky, he had an M4 modified extensively, and BMW basically said, we need you to pay up now the full balance and cancel the agreement, so he had to pay it all off. Not as easy with a 50,000-60,000 pound M3. Slightly easy with a motorbike, but still you don't want to be in that position. So just consider what you're actually going to use the bike for. If you like modifying it, then maybe PCP isn't the way to go. Another thing with any finance product is if you miss payments, you will get a bad credit record. It will go down as a default on your record, and it will make it difficult to get credit in the future. Again, I'm not a financial expert, but it's common sense that if you don't make payments to lenders, then people won't want to give you any money. That's the whole purpose of it. Also, at the end of the PCP, you'll have an agreement where it will be subject to a fair wear and tear agreement. So, a bike at 3 or 4 years, you're expected to give it back in a condition which is commensurate with what a 3-4-year-old bike would look like. So, pretty much not stood outside, all rusty and all fasteners all burred off and damaged, and it's been down the road and all the rest of it, scratches everywhere. You won't get away with that, so you'll have to pay to put that right before you give the bike back. Some bits, like I say, fair wear and tear is absolutely fine, but no, it's not. You will have to pay to put it right. The other thing to consider with a PCP is gap insurance as well. Now, I imagine everybody's been to car dealers and they've offered you the gap insurance, probably really expensive gap insurance that makes them loads of money. It is useful and it is sometimes good to have. It's a personal choice. Again, it's an insurance essentially, but it basically means that if you buy your brand new £15,000 blade and you walk out of the showroom day one, I'll guarantee you that the insurance company, if you send it down the road and write it off on day one, they won't give you £15,000 for that bike. They'll deem it as a used bike, and they may give you, for argument's sake, £14,000 at best case. They might give you £13,000 for the bike, especially if someone else is offering it cheaper than the deal you got. You could be straight away to replace that bike or to cover the finance. You're already £2,000 short. So the purpose of the gap insurance is to give you back the difference between the £13,000 that the insurance company offer you and the essentially the balance of your finance. So you will always be able to pay off your finance. That's what gap insurance is for. It's something that I'm not going to recommend. I'm not a financial advisor. It's down to you. I've had it in the past on, or as a family we've had it on a couple of lease cars that we bought. So even on a lease car or a lease bike, then it's still something that you may want to look at, because a lease essentially works exactly the same way as PCP. It's just that you don't get the option to buy the bike at the end, or for the most part. I know VW, for instance, on their cars, they do give you the option to buy the car at the end of the term of the lease, but not everyone does that. It's normally a case that tough, the car's coming back to us or the bike's coming back to us, and we're having it back. But it's still a finance agreement, so even on a lease, you will be expected to cover the full cost of the finance outstanding on that car, and the finance house will be expecting you to cover the full cost of the loan, and that's where the gap insurance comes in. Again, same with the car as with a bike. If you take it out of the showroom and crash it day one, first week, whatever it might be, the insurance company will never give you the full value of the car compared to what you've just paid for it, and that's where gap insurance comes in. If you've got an example of where that has happened, then fantastic. But you'll find that it's probably not. It's not something that happens too often. I'll talk about leases very briefly. They're very similar to PCP, but the thing about leases is that as a fixed monthly payment, they tend to be over a shorter term, 2 years. Some as short as 12 months, and allow you to get into and out of a bike very quickly. It's a more sort of the modern way of doing things, shall we say. This is my monthly payment, this is my bike, I'm happy just to pay it and then give it back after that term. Again, it's personal choice whether you want to do that. If the numbers work for you, then great. There are some good deals to be had on lease, not necessarily with bikes but on cars, and there's very few people that tend to do lease deals on bikes at the moment. Although, like cars, it might be something that does get more popular as time goes on. And finally, we've got the two similar products, a loan and hire purchase. The fundamental difference between a loan and hire purchase is that hire purchase is secured on the bike. So if you get HP to buy your Fireblade or your Duke, then if you don't make those payments, then they will take the bike off you, essentially. The difference with a loan is secure. It's an unsecured loan. So the bank or whoever it might be give you the £15,000, you still pay your monthly payments, but if you stop making those payments, they will still chase you for the money, but they won't automatically seize the bike from you. They may seize other things down the line, if you get bailiffs involved, horrible situation to be in. But that's essentially what will happen. They'll simply come after you for the money. They won't take the bike off you and call that sort of the agreement finished. So a hire purchase is tied to the bike. The bike is not yours legally until you've paid off the full balance of that loan. I can't stress that enough. It's a little more flexible in terms of what you can and can't do to the bike and things like that, but it'll be sort of written into the agreement if it applies. You still get your fixed payments, you still get your fixed term, and sometimes, as we've seen already, you can get a reasonable rate. The advantage of HP over a loan is that if you've got finance on a bike, particularly on a used bike, so it's out of warranty, and it's something that's happened to my wife a few years ago. She bought a Mini Cooper S. Always wanted one. She bought one, not a brand new one. It was a few years old by then. I can't remember exactly how many years old it was, but it was 5+ years old. She bought this Mini Cooper S, and the head gasket went. So it went back to the car dealer that bought it, not a main dealer, but the car dealer that bought it. It went back. They said they fixed it. It came back. It wasn't right. And it kept to and fro, and it wasn't right. Eventually, we said, look, the car's not fit for purpose. It's essentially a pup. If you can't fix it, then we don't want the car. But the hire purchase company, the finance company, because while not all of the car was covered on the finance, so probably about 30 or 40% of the balance was actually on finance. The rest of it was trading from a previous car. Even though it was only a small amount of the purchase price. Because it was on finance, the finance company actually got involved in basically telling the dealer to sort the job out, else was getting refunded. But because it was such a pup, the wife actually got all of her payments back and interest and things like that, and she was put back into the position where she would have been had the problems not occur, essentially. So got all her money back and things that she paid out. So that's where a hire purchase with a finance company actually helps you. And if you want to pay off in full and you're not going to sort of default in your payments, hire purchase it tends to be a safe way to buy your bike or your car or whatever it might be. So I've gone on quite a bit about the different options when it comes to financing your bike. Yes, in an ideal world it'd be great, wouldn't it, if we could all buy our things in cash, bikes, cars, but that's not the way of the world. People don't tend to save up ahead of time and wait 5 years to save up for our new Fireblade or our new Ducati or whatever it might be. But that's not to say that it's a bad choice to finance something. It's all based on the context. So if you're being charged a 15% APR and you're having to pay through the nose for something just to get that shiny Fireblade or whatever it might be, then that's probably going to be a bad thing to do. But again, it's not for me to judge what you should and shouldn't do. It's not for me to tell you what you should and shouldn't do. What's important is that you're happy with what you're doing and you can afford to finance these flashy luxury items. If it doesn't impact in your daily life and you're happy that you're spending whatever it might be, £100, £200 a month on a finance payment for something that you cover, that you enjoy, that excites you and you're really into, then it's not for me or for anybody else to decide whether that's a good or a bad thing. What's important is that you work out for yourself whether that's actually a good deal or not, essentially, so you're not paying through the nose, you're not being ripped off. That's the important part. What you pay for your bike or your car is down to you. And even paying £1,000, say, for a month for a car could actually be a good deal, because you could be driving around in a Ferrari. I don't know. But it's all sort of relative as to what may or may not be a good deal, and whether you can afford it or not. If you're paying £300 a month for a motorbike, which is a luxury item, but then you can't afford clothes every month or to feed your family or whatever it might be, then clearly priorities aren't where they should be, and that's something for you to decide. But I'm not saying one way is better than the other. I hope you found this video informative. If you've got any personal views on finance and things like that, like I say, I don't currently. I'm lucky that I don't currently have a motorbike on finance. So I'm not trying to say that my way of doing things is something I would consider in the future if I want a new bike. But it'll have to be the right decision I make at that time. So yeah, if you enjoyed the video, please subscribe, like and comment. I'd like to hear your experiences and what your point of view is. Some people will swear blind that the PCP or loan or whatever it might be is just not the way to buy a bike. I know the Missing and Fly, TMF, Andy doesn't really like PCP at all, but I'll also say he's never really discussed it either. So credit is a sound financial decision, or can be a sound financial decision based on the circumstances at the time. So you make your mind up. Hopefully this has helped you, and I'll see you again on the next one. Cheers, bye bye.